Welcome to the Deep Dive, and specifically our Talk Tickers segment, your essential shortcut to understanding the latest earnings calls. Today, we're zeroing in on AeroVironment Inc., ticker AVAV. They just released their first quarter fiscal year 2026 results yesterday. Now, this isn't just, any defense contractor. AVAV is a really pivotal player, especially after that huge acquisition of BlueHalo. They're kind of reshaping the defense tech landscape. So our mission today is pretty clear. Cut through the noise, figure out how that BlueHalo integration is really impacting the financials and, well, their future. Can AVAV make that leap from, say, a niche drone maker to a truly diversified defense tech giant? Or is this integration maybe just a bit too complex? Let's try and unravel this.
It is. Yeah, it's a fascinating moment for AeroVironment. It's definitely a nuanced picture. The market's still processing it. You can tell we're seeing, really strong top-line performance. But there are also these significant, though frankly expected impacts from BlueHalo that we absolutely need to look closer at.
Okay, so with that big picture set, let's peel back the layers. What do the raw numbers actually tell us? For Q1 FY26, AeroVironment reported non-GAAP EPS of $0.32. Now, for those of you tracking closely, that's the adjusted earnings per share, strips out some one-time costs, gives you a clearer view of core profitability. And that figure, it was a slight miss. Facts said consensus was $0.33.
Right.
So just a penny off there.
A slight miss, yeah.
But here's where it gets really interesting. The revenue. They delivered a powerful revenue beat. Came in at $454.7 million. That's way above the consensus, which is around $437.6 million. And it marks a truly substantial 140% year-over-year increase. Massive jump.
And that contrast, the slight EPS miss versus that huge revenue beat, that's really the core tension here. It speaks volumes. While the market, initially reacted with some volatility, maybe focusing on that penny miss, the sheer scale of the revenue growth points directly to incredibly robust underlying demand. For their products, their services, it suggests investors are really weighing, okay, what are the immediate accounting impacts of this big acquisition versus AeroVironment's newly strengthened strategic position and market grab?
They also reported adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization. A key measure of operational cash flow came in at $56.6 million.
Strong number.
Yeah. Up significantly from $37.2 million last year. And talk about future visibility. They've got a funded backlog of $1.1 billion. And an even more impressive unfunded backlog hitting $3.1 billion. Bookings for the quarter were almost $400 million. That unfunded number, that $3.1 billion, really makes you sit up straight, doesn't it?
It absolutely does, yeah. That $3.1 billion unfunded backlog is basically contracts they've won but aren't fully funded yet. Specific dollars haven't been committed. It's a massive pipeline, offers incredible revenue visibility, assuming those funds come through. And, well, given the current global defense spending, management seems pretty confident they will.
Okay, so now let's unpack these figures and what management actually said in more detail, because this is where we really start to dig into that central question about BlueHalo being fully in the mix now.
So while the non-GAAP EPS showed that core profitability, the official GAAP EPS that's generally accepted accounting principles, the full picture, it was actually a loss, $1.44 per share.
Okay.
Now, this isn't necessarily a red flag, right? It's more a direct result of buying BlueHalo. We're seeing about $79.7 million in purchase accounting adjustments and intangible amortization. Think of intangible amortization as like the accounting process of slowly writing down the value of non-physical things, patents, software, brand reputation that they got with BlueHalo. It's significant non-cash noise on the balance sheet, basically.
Okay.
But it doesn't really reflect the day-to-day operational health.
Right. Okay. So a lot of that GAAP loss is really just the cost of doing a big deal, not necessarily a sign the quarter went badly operationally. Breaking down the revenue mix, their legacy autonomous systems, segment drones, loitering munitions that brought in $285.3 million. And the new space, cyber, and directed energy segment, mostly from BlueHalo, added a substantial $169.4 million. That's a real shift in their profile.
It is.
What was also interesting, 78% of revenue was domestic. Ukraine represented 8%, the rest of Europe 6%. And they also highlighted specific products like their Switchblade 600, that's their big loitering munition system revenue there, was up over 200%.
Wow.
And their Jump 20 drone, the vertical takeoff one, up over 600%. Huge growth in key areas.
Which brings us to a crucial point. How quickly will the market look past these, non-cash accounting adjustments? Will they focus on the combined company's operational leverage and, frankly, impressive future cash flow potential? Management, for their part, sounded very confident. Reiterated cost discipline, achieving synergies. They're actually expecting adjusted gross margins to improve throughout the year.
Oh, really?
Yeah, aiming for the mid-30s by Q4. That's a strong signal, right? About the underlying profitability of the whole integrated business.
Definitely. Okay, switching gears a bit to strategic wins. Management highlighted record demand, that massive backlog we mentioned. They also confirmed the BlueHalo integration is actually progressing ahead of schedule. That's good news.
Yeah, it is good news.
And they're making significant deliveries, too. First laser weapon systems, P550 drones to the U.S. Army. Stuff is actually going out the door. But the headline grabber for me was that nearly $240 million award for long-haul space laser communication terminals.
Yeah, that's huge.
This is a big deal. We're talking systems delivered over the next 3.5 years, options for more, potentially a multi-billion-dollar opportunity. And they explicitly said they're leading the industry here.
And if you connect that to the bigger picture, the Pentagon's focus, fervent focus, on unmanned systems, laser defense, secure space comms, it's not just a trend, it's a structural shift.
Right.
This creates a powerful, long-lasting tailwind for companies like AeroVironment that can actually deliver these things.
Yeah.
And beyond the laser comms, other key wins. That $95 million contract for Freedom Eagle 1, the FE1, that's their long-range kinetic interceptor missile.
Kinetic interceptor, so hitting things.
Basically, yeah. Hitting things from further away and all weather. It hints at broader air defense capabilities, not just counter-drone stuff. Plus, they're successfully delivering their Locust laser weapon systems for counter-UAS. That's directed energy, taking down drone groups. They're even looking at future uses against, like, hypersonic missiles. Very forward-looking.
And on the drone front itself, they delivered multiple P550 Route 2 UAS systems, unmanned aircraft systems, to the Army. This is for the Long Range Reconnaissance Program, LRR. That's a program of record, valued at about $1 billion over the next 5 years.
$1 billion, yeah.
Management clearly thinks the P550 just outperforms everything else out there. They're already eyeing international sales, too. That's some serious confidence.
It is. And maybe one of the most strategic moves they announced was unveiling AeroVironment.
AeroVironment.
Yeah, it's a hardware-agnostic software platform, an ecosystem, really, unifying their AI-powered software tools. The CEO confirmed, look, this can integrate with third-party hardware, and it's open to third-party software developers, too.
Oh, okay. Platform play.
Exactly. It's a significant shift. Positions them not just as a hardware provider, but as a defense tech platform. It basically blends the best software from legacy AeroVironment and BlueHalo. Think multi-domain command and control, intel analysis, synthetic training, even autonomous targeting. That's a major play for dominance in the software layer of defense.
I hear you. It really feels like they're trying to build an ecosystem, not just sell, individual bits of kit. They also announced key partnerships. One with Sierra Nevada Corporation for the Golden Dome Defense Initiative. That's all about integrating open architecture solutions to neutralize threats, drones, cruise missiles, the works. And they've expanded collaborations internationally, too. Denmark for UAS training, the Dutch Ministry of Defense to modernize their Puma drone fleet, shows strong international demand.
Right. And looking ahead, the full fiscal year 2026, they maintain the revenue guidance, $1.9 to $2.0 billion. Adjusted EBITDA, $300 to $320 million. Kept those steady.
Okay.
But here's what was striking. The non-GAAP EPS guidance, they actually raised it to $3.60, $3.70, up from $2.80, $3 previously.
Wow. Okay. How?
Largely due to refinancing their debt. It's a clever financial move, basically boost the bottom line. And, despite that Q1 non-GAAP miss, it speaks volumes about their longer-term confidence and financial agility.
That's a great point. It's not just the numbers, but the strategy behind them. And speaking of confidence, they reported strong revenue visibility, too. 82% at the midpoint of their FY26 guide.
Which is high.
Yeah, higher end of their historical range. And that includes expected revenue from long-term contracts that aren't even technically funded yet.
Right.
So, zooming out a bit, what does all this mean for you, the listener, if you're watching this rapidly evolving defense tech space?
Well, the market sentiment, that choppy trading after earnings, it really seemed to focus on that near-term accounting drag from BlueHalo. But management's tone, unequivocally constructive. They weren't just like putting on a brave face. They hammered home the record backlog, that impressive top-line beat, and crucially, the raised full-year non-GAAP EPS guide. That shows a very clear path to increased profitability. And they explicitly said the BlueHalo integration isn't just on track, it's ahead of plan, generating significant new growth opportunities already.
The company also mentioned it's actively pursuing over 20 programs of record, potential value, exceeding $20 billion over the next 5 years.
20 billion.
That's not a pocket change. We're talking opportunities in, one-way attack systems, space laser comms, next-gen counter-UAS missiles. It really speaks to the scale of future growth across diverse, high-priority areas.
Which then brings us back to a really important question. Can they actually scale manufacturing to meet this potentially staggering demand?
Good question.
Management certainly thinks so. They talked about plans for a new state-of-the-art facility in Salt Lake City, operations across 12 states already. They even declared themselves unrivaled in the industry for high-volume manufacturing expertise. That's a critical capability, right, for urgent national security needs. And they pointed to their installed base, over 42,000 platforms fielded globally, exporting to over 100 allied nations. That's a serious claim to back up their manufacturing prowess.
It's a bold claim, definitely. But in this market, execution is everything, right? The industry backdrop is also critical here. Global defense spending is at record highs. Aerospace and defense ETFs have done well year to year. And AeroVironment is clearly evolving. They're moving beyond just being known for niche unmanned systems, becoming a truly diversified defense tech platform. Unmanned, loitering munitions, directed energy, and now significantly space and cyber via BlueHalo.
And that strategic shift, it positions them to compete for much larger, longer duration contracts. Now, competition exists for sure, especially with the Pentagon talking about American drone dominance.
Right.
But management stressed their track record, their cost-efficient solutions, and that unique advantage in scaling production. They actually see the increasing market focus as a positive, draws more investment, more attention to the sector they aim to lead.
Okay, now for our signature segment. A truly outrageous but plausible trade idea. Strictly for educational purposes, people, definitely not financial advice.
Okay, so the market's initial reaction to AVA's earnings, it presented this classic disconnect, right?
You've got stellar top-line growth, that massive $3.1 billion unfunded backlog giving incredible visibility, and a raised full-year EPS guide. Yet, the stock initially dipped. Why? Because non-GAAP EPS missed by a single penny. And there's all that accounting noise from the BlueHalo integration.
Okay, so the trade.
For the adventurous listener, I'd propose considering a long-term synthetic long position, specifically what's called a bullish risk reversal.
Okay, break that down simply.
Basically, you're making a big bet the stock soars over the longer term, say 9-12 months out. That's when the BlueHalo accounting effect should be well in the rearview mirror, and that huge backlog starts visibly hitting the bottom line. To help fund that long-term bet, you could sell nearer-term put options, maybe slightly in the money.
To capitalize on the current high implied volatility, basically, the market expecting big price swings right after earnings, you collect premium for selling those puts. This trade implicitly bets the market will quickly re-rate AVAV, look past the temporary accounting stuff, focus on its strategic alignment with global defense priorities, and its, frankly, possibly unparalleled ability to scale critical tech like laser comms and counter-UAS. It's a conviction play. You're betting on management executing on this huge opportunity set, dismissing the temporary drag, focusing on leadership in these multi-billion-dollar growth markets.
Got it. So to recap this deep dive into AeroVironment's Q1 FY26, despite that slight non-GAAP EPS miss, the company delivered a record revenue beat, significant backlog growth, even raised its full-year non-GAAP EPS guidance, partly thanks to some smart financial footwork.
Right.
Their strategic evolution, really supercharged by BlueHalo, positions them firmly at the forefront of critical defense tech lasers, advanced drones, counter-drone systems, space, the works.
The path ahead. It involves skillfully turning that massive unfunded backlog into predictable profit margins, while successfully integrating BlueHalo's varied capabilities and, yes, managing the accounting stuff. Their ability to deliver at scale on these emerging high-priority programs, that's going to be key. And that strong revenue visibility certainly suggests they have a solid foundation to build on.
As always, remember that everything discussed here on the deep dive is purely for informational and entertainment purposes. It should absolutely not be considered financial advice. We are simply trying to convey the ideas contained in the original source material, the earnings call, without endorsing any particular viewpoints ourselves.
Yeah, absolutely. We strongly encourage you to do your own research, talk to a qualified financial professional, and make sure you thoroughly understand the risks before making any investment decisions.
Thank you for joining us. We hope this deep dive gave you some valuable insights into AeroVironment's latest quarter and its strategic direction. The big question now really is, will that ambitious pivot to a diversified defense tech platform truly pay off in sustained long-term growth. We look forward to having you back for our next earnings call summary.